Hello and welcome back to Moneycontrol's live stream. You're tuned into Closing Bell with me, Lovisha, Darad. Well, we did see today that it was an all-in-all red in the trading session today, and of course, Nifty snapped its 4-day winning streak, and Nifty has slipped below that 25,600 mark, which we were eyeing out and hoping out for it to hold out. But yes, Sensex also below that 83,650 levels and down about 450 points. However, the market advanced decline ratio that stands still at 1:1 ratio, and India Wix that has jumped over 3% to stay above that 12 odd levels. But yes, anything which is below 15 is what the street is expecting that would maintain the market calm going ahead as also. One interesting report that came out today by Jefferies, where it has mentioned that the continued supply of equity could result in limited near-term returns for the benchmark indices. Now, we did see that in the months of May and June that there was a large share supply in the markets due to large promoter exits, and then the remaining supply was seen via QIPs and a huge lineup of IPOs. So while another 65 IPOs are awaiting regulatory clearance, the supply of paper in the market could remain elevated in the market, and that would cap upside going on. That is something that we need to watch out for, and that is what Jeffrey analysts have been warning out for. But coming to some of the sectoral gainers and losers, let's take a look. Nifty PSU Bank, definitely one of the top sectoral gainers after Finance Ministry did say that all of the lenders need to monetize their subsidiaries. So you can see all of them like Canara Bank, SBI, all of them did well in today's trading session. All the 12 constituents in the Nifty PSU Bank index also did well in today's trading session. However, private banks that took a setback. Nifty Private Bank Index saw a cut of about 0.8%, and if you look at Bank Nifty Index also, that took a setback of about 0.2% decline as well. On the other hand, auto stocks also did not fare well. Metals also on the losing end. Oil and gas, after last week's rally, given the ease in the crude oil prices, did see a setback and a profit booking of about 0.3% cut that came in too. On the other hand, if you look at the broader end of the markets, that stood out as the clear winner of today. The small cap and mid cap indices did show some resilience. Small cap especially, if you look at 0.8% gains that came in from the Nifty small cap index. Some of the notable movers also came in from the small cap index. Sigachi Industries, Karnataka Bank, JB Chemicals, all of them were one of the top losers on the BSE small cap index. Sigachi Industries saw a cut of about 11.5% given the explosion in the Telangana facility, and that is why we can see a sentimental reaction which played out on the counter also. JB Chemicals not reacting well to the acquisition news, seeing a cut of about 6%. We did see that the acquisition deal was priced to about a discount at the current market price, and of course the remaining they will be initiating the acquisition in 2 phases, while the second phase will be by a 26% open offer, which was also again priced at below the current market price of JB Chemicals. Other than that, we can see Karnataka Bank also seeing a cut of about 5.75%. 2 top level exits we have seen due to personal reasons, and that is why we can see some of the management reaction that is playing out on the stock, which saw this stock also not reacting well. On the other hand, if you look at some of the top losers and gainers on the Nifty 50 on the large caps front, Trent, SBI, Bharat Electronics, Indusind Bank, all of them did well with about 1 to 3% gains. And on the losing end, Tata Consumer Products with about 2.2% cut, Axis Bank with about 2.1% cut, and Kotak Mahindra Bank, Hero Motocorp, all of them seeing a cut of about 1 to 2%. But without much further ado, let's quickly get on board with our market voice of today. We have technical expert Milan Vaishnav, who is joining us. Milan, good afternoon. We did see that the Nifty has broken below that 25,600 mark, but still above that 25,200 support levels that the street was watching out for. How do you see and how do you read today's moves in the markets, and what are the next levels we can watch out for?
Very good afternoon, Lovisha. See, what has happened is that it was on 15th of May when Nifty marked its high of 25,116 odd levels. And from May 16 until next 6 weeks, what we did was we just consolidated in a very defined range of 24,500 on the lower side and 25,100, 150 on the higher side. And it was just 4 days ago that Nifty has attempted breakout, and in fact not attempted, it has ultimately broken out of that range after 6 weeks of consolidation. So now if I look at the chart from a short-term perspective, what we did today was just to quietly consolidate after the breakout. When I say quietly consolidate, because if we put PSU Bank Index aside, which was up by almost 2.5 or 2.5% or so, all other sectors, the best performing sector was not up by more than 0.7%. The worst performer was not down by more than 0.7%. So by and large, we had a quiet and consolidating markets. Now, if we take a look at the derivatives data, one thing I observed that for today, that is options activity for today, limited to today, has largely seen writing of incremental calls from 25,600 levels and higher. And we have also seen some unwinding of puts. So that takes me to the immediate June 03 expiry, where I see that 25,600 is a place where there is second highest accumulation of the call OI. Now, reason I'm saying second highest and not the highest, which is at 26,000, is that beyond 26,000 levels, even though it's second highest call OI, beyond 26,600, there is very little or negligible writing of puts that has happened, at least until now. So I believe that over the immediate short term, maybe until next 3 to 4 days, we might see Nifty continuing to consolidate with the range of 25,600, 700 zone acting as resistance. And we spend some time consolidating in a very little or defined range before we continue with our up move.
Is definitely looking forward to an upside going ahead. But Milan, today one of the top sectoral movers, that was your Nifty PSU Bank, 2% uptick. How do you view the PSU banking stocks now that the FM has directed monetization of their subsidiaries too?
I expect performance in Nifty PSU Bank to continue. Honestly speaking, I'm expecting to test around 7,500 levels on the index. We have a minor resistance at 7,225 on the Nifty PSU Bank index, but by and large, I expect that level will ultimately get taken out on the upside. But now this comes with a caveat that we are getting much of the impetus from the news that from the external fundamental developments that are taking place. But I'll also expect that PSU Bank will continue to further improve its relative performance vis-a-vis the broader markets.
Okay. Milan, what about the auto stocks? Because today it did underperform, and tomorrow we can see some sales data which will be trickling in also. We did see that Nomura's dealer checks does suggest a subdued performance from the automakers on a month-on-month basis. But anything that you're liking from this space?
Yes, in fact, auto space, along with a couple of other sectors, are one of those sectors which may, benefit from the shift of leadership that may happen when the market start moving higher once again. We have had certain sectors which were leading the market until now, but going ahead, we might have some few other sectors that might see leadership coming in, and Nifty Auto Index is one of them. So yes, I have a favorable outlook on Nifty Auto, and among that pack, I have I would be willing to look at stocks like M&M, Maruti, and Tata Motors.
Okay, Maruti and Tata Motors. All right, let's take some individual stocks in focus today. Torrent Pharma, that was one of the top newsmakers of the day, Milan, and given that it is set to acquire controlling stake in JB Chemicals. Now, they do plan to acquire about 49% stake, in which 26% stake acquisition will be through the open offer, which is priced below the current market price for JB Chemicals. But what should JB Chemicals investors do at this point of time? Should they hold tender shares? What do you expect?
JB Chemicals, I think they should continue holding on to their shares. The fact that the acquisition is happening at discount than the prevailing price, I think they should patiently wait for the Torrent Pharma shares to come in. And I also expect the prices to stabilize so far as JB Pharma is concerned. So I don't think they need to react anything in haste at this moment, and just continue staying put with it.
Okay, all right. Continue staying put with JB Chemicals. Let's take another stock in focus. That was your IDBI Bank because that was above that 100-odd levels once again today. We did see some reports which have suggested that the government is soon finalizing the financial bids for the company's privatization. What does the near-term chart indicate, Milan? Because from a YTD perspective, the stock has been on a good upward trajectory.
The stock has approached its major resistance at 105 because it did come up from its high point, which was 106 today. And this setup can be interpreted in two ways. One, yes, the stock has encountered a formidable resistance that is placed between 104 and 106. But in the same breath, I also expect that there would be some consolidation, no doubt. That could not be one way parabolic rise. But I don't see any major retracements or major corrective moves happening in IDBI Bank. I expect that the stock will consolidate for some time and eventually it will take out 106 level, which would lead to some structural breakout in the stock.
Okay, all right. Now that we talked about a gaining lender, let's talk about Karnataka Bank also, Milan, because we did see some top level exits today and the stock did tank as a result. But from March onwards, the stock is on an upward trajectory. Do you believe that this news would just be a temporary blip in the stock for today?
I think the news got victimized because we got some reason to speak about it. That is, the top brass has existed and the stock has reacted negatively. But I don't know. But was this in the offing or not? But if you look at the charts in isolation, since the high that was marked is sometime in the mid of May, when the stock first time tried to cross above 200 DMA. Since then until now, all the incremental highs have been coming with negative divergences on the lead indicators. So maybe since last 4 or 5 weeks, the stock is anyway telling us that it's losing its internal strength. The reason we may write anything against that, but if we look at solely from the price action perspective, technical indicators were saying that the stock is losing out on steam, and today it found a reason to break down. It was anyway weak, and it's not that it will stabilize after a knee-jerk reaction. I don't think it will, and 210 to 212 levels will continue to pose solid resistance, at least from the technical front.
Okay, all right. Let's take some of the stocks and focus also. HDFC Life Insurance Company, SBI Life, all of them, they are some of the top gainers on the Nifty 50 index during the first 6 months of 2025. Of course, it's the last day of this month as well. And both the stocks have gained about 33% each during these first 6 months of the year. Milan, what do you expect? Do you expect this trend to continue for both of these counters?
Yes, very much. Even the higher time frame charts are very much intact. But at the same time, I would also say that there has been a bit of lag in performance of SBI Life vis-a-vis HDFC Life. Therefore, I expect that while the strength in both of the stocks will continue, I expect SBI Life to perform better, relatively stay better than HDFC Life going ahead, because it has got some room to play the catch up and has some couple of percentage of points of room on the upside. Whereas by and large, once that happens, I expect that entire space to take a breather and consolidate.
Okay, all right. Let's take one more stock in focus. We had Alembic Pharma, which rose spectacularly today after it did receive a final nod from the US FDA for its cancer drug. But on the charts, Milan, how do we look like? We did see a good breakout today. Do we expect an extension of the same going ahead?
Yes, in all likelihood, because there has been I mean, we cannot say a classical ascending triangle, but not so classical one. But yes, there is a breakout from the formation, and importantly, the stock now trades above all its key moving averages. That is one point. And second thing, some of the lead indicators are showing some good bullish divergences on the charts where the prices tend to follow these indicators since they're lead indicators. I expect upsides in Alembic Pharma to continue, and near-term targets could be placed around 1100, 1120 odd levels.
Okay, 1120 odd levels for Alembic Pharma. Just one last question before we let you go, Milan. Anything that you're watching out in this market? Anything that you want to point out as a buying pick?
Two stocks I'm looking at. One is Paytm. Paytm, it has serious resistance at around 980 to 1000 rupees, but I expect the stock to go around 980, 1000 initially. But if we zoom out a bit and look at the higher time frame charts, it is undergoing a very textbook-like bullish technical pattern. And if 1000 gets broken out on the upside, then the stock might be in for a major structural up move. But that's a medium-term thing that I'm talking about. But from an immediate perspective, also I'm looking at Paytm with immediate targets of around 980 odd levels, maintaining a stop loss of 880. And
Okay.
the second stock that I'm looking at is from the PSU space. SBI is there. SBI, I'm expecting a renewed momentum to come in. 850 to 860 is what I expect. And the protective stops could be placed around 790 levels.
Okay, all right, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go. Milan, thank you so much for your time, and we hope that we connect with you soon.
My pleasure, Lovisha. Thank you.
Thank you. All right, with that, we have come to an end of this edition of Closing Bell. Do stay tuned to us, and we'll be back with markets tomorrow at the same time in the morning. So we keep watching moneycontrol.com.